Welcome back to Rekt Radio, the only place where you get your crypto news with a side of sunshine and a whole lot of, well, coal.
Let's just call it a reality check, Sonny. And today, the market has officially run out of ideas and is starting to mimic the absolute worst habits of the legacy financial world. It's painful to watch.
Painful? Coal, it's glorious. We are witnessing the single most important phase of adoption. This isn't just about retail investors anymore. The corporations are coming. The suits are here and they are buying Bitcoin with both hands. This is the ultimate validation.
Oh, hang on a second, Sonny. Validation? I see it as the ultimate concentration of risk. This isn't validation. It's a contagion vector in the making. You had a decentralized asset, and now you're cheering because a handful of publicly traded companies are turning it into a line item on their quarterly reports. It's a disaster waiting to happen.
But Cole, you're missing the point. This is the herd we've been waiting for. These are sophisticated, publicly traded companies making a strategic decision to hold Bitcoin as a treasury reserve asset. It de-risks the entire space. When a major corporation adds Bitcoin to its balance sheet, it sends a powerful signal to every other CFO in the world that this is a serious, long-term store of value.
Wait, let me jump in here. Sophisticated? Strategic? That's the same language they used in 2008 for mortgage-backed securities. These companies aren't strategic, they're trend chasing. And what happens when one of these giants has a bad quarter and needs liquidity? Their Bitcoin stash is the first thing on the chopping block. You're not creating stability, you're creating the world's biggest and most volatile sellers. Imagine an earnings call where a CEO has to explain a 30% drawdown on their corporate treasury because of a weekend crypto crash. Heads will roll.
That's pure, unsubstantiated FUD. These companies are allocating for the long haul, precisely to protect themselves from the inflation and mismanagement of traditional currencies. They are buying insurance, not a speculative lottery ticket. Every company that does this makes it easier for the next one to follow. The floodgates are opening, Cole. This is how we get to mass adoption.
You call it mass adoption. I call it creating a systemic weakness. It ties the fate of Bitcoin to the quarterly earnings cycle. It makes it vulnerable to shareholder activism and regulatory crackdowns on corporate accounting. You're taking a beautiful, independent asset and shackling it to the very system it was designed to escape. It's not a floodgate, it's a trapdoor.
You see a trapdoor, I see a foundation being laid for a trillion-dollar asset class. The more intertwined it becomes with the global economy, the more resilient it gets. But you know what? Enough with the theory. Let's look at the charts. It's time to ask the oracle, the one source that cuts through the narrative. Let's pull up the TradingView technicals for Bitcoin.
My favorite part of the show, the moment we hold your boundless optimism up to the unforgiving light of the charts. Let's start with your happy place, Sonny, the 1-month chart. What does the big, beautiful, long-term picture tell us?
I am so glad you asked. The 1-month summary is a crystal-clear, diamond-handed, strong buy. The moving averages, a strong buy. The oscillators, a buy. It is an absolute fortress of bullish conviction. The macro trend is not just our friend, Cole, it's our family.
A lovely picture of where we've been. A fond memory. Now, let's zoom in a little. How is that fortress holding up on the 1-week chart?
Still holding strong. The 1-week summary is also a strong buy. The momentum is on our side. The bulls are clearly, unequivocally in control of the medium-term trend. This corporate buying is just adding fuel to an already raging fire.
But wait, let me jump in here. You conveniently skimmed right over the details. The 1-week moving averages are a strong buy, I'll grant you that. But the oscillators, which measure the actual momentum, have faded to neutral. The engine is losing power, Sonny. The upward climb is getting exhausting.
That's just the market taking a healthy, well-deserved breath. It is consolidating its gains, building a base before the next explosive launch higher. It's healthy. Now for the moment of truth, the daily chart. What does the oracle say is happening right now?
Sonny, this is where the rubber meets the road and your narrative hits a brick wall. I hope you're ready. The 1-day summary? is a strong sell.
What? A strong sell? That's impossible. That's just market noise. It's a shakeout before the next leg up, designed to scare people who don't see the bigger picture. You can't put so much weight on a single day's data.
I'm not the one saying it. The oracle is, and it gets even worse for your fairy tale. The daily oscillators, a strong sell. And the daily moving averages, the very heart of the short-term trend, a strong sell. Your healthy breather is a code red. The corporations you're so excited about are currently deep underwater on their strategic investment. The short-term trend isn't just broken, it has been shattered into a million pieces.
You are a professional dream crusher. You are fixated on the daily noise while willfully ignoring the monumental strong buy signal on the monthly chart. This is the definition of a buying opportunity. The market is giving brave investors a discount, a gift, and you are trying to talk them out of it.
You staring at a postcard of a beautiful skyscraper while standing in its demolition zone. The daily chart is what is happening now, and right now, the market is telling us that the corporate FOMO was the final euphoric gasp before the top. The trend is your friend until the bend at the end, Sonny, and the oracle is screaming that we are at the bend.
That's all for this episode of Rekt Radio. Don't let the short-term volatility and the cynical bears shake you out of your positions. The corporate adoption phase has just begun, and the bigger picture has never been brighter. Stay optimistic and see this dip for the gift that it is.
My final thought? When the monthly chart says buy, but the daily moving averages are screaming strong sell, it's not a gift, it's a warning. The ground is giving way. The so-called smart money might just be the exit liquidity. Be careful. You've been listening to Rekt Radio.